quick quiz, one question quiz. Here it is. I want to know what these three numbers added up to in decimal form. I want to know what these three numbers add up to in decimal form. I'll give you 1 minute to do it. Six 21st only means 6 divided by 21, which is going to give us what? 0.286 plus 7 divided by 17. This line only means divided by. All right, 7, so that is 0.412, and 8 divided by 51. All right, 854 divided by 51, and that is going to be 0.157. All right, add it all together, it comes to 0.855. The reason I tell you that is always get rid of your fractions. Always get rid of fractions. All you got to do is divide them by, right? The top divided by the bottom gets rid of that fraction. So really, if I tell you that your property is going to be taxed at 45 cents per 100, what am I doing? 0.45 divided by 100. 0.0045. That's all I'm doing. At this particular point, the state of North Carolina requires us to, as we're doing the calculations, go to 3 decimal places. 3 decimal places as we're doing the calculations, and then at the end, round to your 2 places. Okay, at the very last calculation. So that's what they require. Now, again, it's not going to make that big a difference, but the requirement is 3 decimal places as you're doing the calculations. At the end, you can round to 2 places. Okay, so that was a good question. So everybody getting more comfortable with these things? We're going to show you a couple more examples. We're going to spend a little bit of time so we can do this. All right. All right. You got to be able to do this. I know you can. It's not that hard. I'm not going to show you anything that you didn't learn in 5th grade, by 5th grade, except for that class we're going to do on calculus, which would be derivatives and integrals and a couple of tangents and cosines. But that comes later on. I promise you, nothing that isn't addition, subtraction, multiplication, and division. That is all. That's all we're going to do. We just got to put it in the right places. You can all count. I know you can all count, right? And I just made it easier for you. That says there's 30 days in every month, 360 days in every year. You don't even have to think about that. All right? Take your time, though, because here's the secret. Here's the secret. As we're doing these math problems, the Real Estate Commission knows how you're going to do them wrong. And I'm going to tell you that when you go to do it wrong, and you do it wrong, yeah, by rushing is exactly right. When you do it wrong, guess which answer is going to be one of your 4 selections? That particular answer. So you may think you're doing it right. You may see it and say, yeah, I'll choose that one. And unless you have the concept right, it's going to be wrong. It's not the way you're supposed to do the problem. So rule number 1 in every single problem you're going to do is you got to read and understand the problem. Okay, before you even get to the math. I'm not kidding you. There are only addition, subtraction, multiplication, division. That is it. There's no tricks here. All right, we don't have time for tricks or games. We just want to make sure that we can do this. But we have to understand it, right? Because as the broker, aren't we supposed to know more than what our client who just walked in knows? Aren't we supposed to be able to explain to them exactly what we just did or what this is going to cost them? And I don't care if they buy a $750,000 house. If you make a $10 mistake in math, are they going to ever forgive you? No, they're not. They'll never forget that 10 bucks that you cost them. Okay. That's life. Okay. There's no good way or bad way about that. That's life. That's the business we're in. So we have to be accurate. We have to be accurate. Okay. So that's why accuracy counts. So if we don't understand what we're doing, or we put the wrong problem in place, well, we're going to solve it, but that's not what we were supposed to do. So that's why wording is very, very important as we go forward. All right. So it's really important to have this conversation. I don't want to get ripped off for a dime. So we need to be able to make sure we're correct. All right. So whatever way you need to do it. So don't rush is a perfectly word for word. Every word is an exam, right? That's what we want. Every word is an exam. Okay. Ready? Let's go back to work. Okay. This is what we were talking about a little earlier. They're going to give you an annual tax bill. The annual tax bill would be our partial number up here. All right. Move this a little bit. Hang on. Let me get a spotlight. The annual tax bill is going to be our partial number. So if this is 2,200, like it is over here, and our assessed value is 173,228, if I divide this, or let's do it, yeah, if I divide this, it's going to give me what, 0.0127? So divide it out. Or come out and do it this way. This is the easier way. In this particular case, I'm just going to move this 2 places over, 0.0127, right? That's going to be my decimal. And I'm going to divide it. So take 2,200 and divide it by 0.0127. And tell me that you got 173,228. Did you do it? Did you get it? Right? Take that 173,228 and multiply it by 0.0127 and see if you don't come up with 2199.99.99.99. 2,200. Does that work? Probably. Right? Same thing if we divided this. Right? If we divided this, it's going to come out to this one. All right? That's how it works. That's how it works. So for up and down, make believe that this is that line there, right? Remember we said that we're just going to, that's our divided by line, right? Same thing, 621s. Well, this is 2,200 by 173,228. That's all we think. Instead of this being straight across, assume it's on an angle, right? Assume it that way. Assume it that way. And that's all you need to do, right? And you can figure that out. All right. Now, big key here. Your county is going to give you the county rate of taxes. And if you live in the county, that's all you got to worry about. But what if you live in the city? Is the city located in the county? Yeah, the city's located in the county. So therefore, you have to pay both city and county taxes. So what do you got to do if they give you 2 rates and you live in the city? You have to add them together, right? You got to add them together and then pay the taxes on both. If you live in the city, you got to pay the city and the county. But be very, very careful about reading the questions, all right? Because it'll tell you. It'll tell you. So if you're in the county, you only have to pay county rates. If you're in the city, you got to pay both city and county. Okay, you have to pay both. Okay? If the annual tax bill is $23.31.74, and our assessed value is 1.678 per 100, what is our assessed value? What is our assessed value? If our taxes are $1.678 per 100, and I told you that 2231.74 is our tax bill, somebody do my assessed value. There you go. All we're going to do is divide 2231.74 by 0.01678, and you're going to come up to your $133,000 assessed value. All right. Anybody not see that? Anybody not see that? Please ask. We'll go slow. All right. We're going to do some problems in our math packet in a little bit. Just want to make sure we get this. All right. Okay. The assessed value of a property inside the city limits is $286,000. County taxes are 81 cents per hundred. City taxes are 72 cents per hundred. What's the annual tax bill? What's the annual tax bill? Somebody try to figure that out for me. All right, so if we do this the way it looks here, if our assessed value of the property is $286,000, and I am inside the city, so I have 0.81 plus 0.72, that's going to be 1.53. So this is going to be 1.53 per 100, or 0.0153. Now, if it's across here, it's multiplication, right? And if we multiply it, it's going to come to 43.75 and 80 cents. Okay? Everybody see that? All right, look, if you're struggling and you don't know, please speak up. That's the only way I can tell that you're having a problem. All right. Carrying phone. And that's simply what we just did. All right. The assessed value of a property outside the city limits is $246. County taxes are 89 cents per 100. City taxes are 74 cents per 100. What's the monthly tax bill? What is the monthly tax bill? So let's see what I got. If I know that my value, 246, all right, I live outside the city, so I'm only concerned with this one, 0.89 per 100, or mathematically 0.0089, all right? And if I multiply these across, I'm going to get 21.89 and 40 cents. But what does this say? Monthly divided by 12, right? And it's going to be 182.45. Your questions are going to be a lot like that. They're going to be a lot like that. All right. Pay attention to the words. The words are important. The words are very important. Okay. Very, very important. All right. That's what we just did. Okay. Now, that is how North Carolina does theirs, is dollars per thousand. If you cross the border to South Carolina, and you may get something like this on a national exam, they use what's called a millage rate. And 1 mil is 1/1000th. That's why I told you earlier about thousands. 1 mil is 1/1000th. So if I have something that is 10 mils, right? Well, what did I say before? If I'm dividing this by 1,000, what am I doing? I'm moving this decimal place 3 places over, right? Many zeros. So if I have a mills, all right, any mills number, 275 mills, it's going to be what? 0.275. In this particular case, 5 mills, I'm going to have to add a couple of zeros to it. And it's going to be 0.005. All right. So mills are dollars per thousand. Okay. Per thousand. So when we're doing mills, it's 1,000. So you're going to move the decimal 3 places over. You probably will see something like that on the national exam. South Carolina does it in mills. North Carolina does it per 100. All right. So it's something you want to pay attention to. Okay. All right, so we're just going to move the decimal place 3 places to the left. All right. Okay, so we covered all of these things, deed restrictions in this chapter, easements, dominant tenements, servient tenements, right? We talked about those. Encroachments were over the line. Encumbrance is a burden on the property, right? A lien, somebody can force you to sell your house in order to pay a judgment or a lien, all right? And a license is when I give you the opportunity to use something, but I can revoke it, all right? Those are all key terms there. Okay, in the chat box, answer this first question. What liens take precedent over all others? What liens take precedent over all others? What gets paid first? What gets paid right after property taxes? What else? There's one more. Special assessments, right? Liens take precedence over all others, real property taxes, and then right after that, special assessments. If 20 years passes and a recorded easement is never used, would it be terminated? Yes or no? No, it's recorded, staying there forever until you take it out of there. True or false? A homeowner puts their house on the market on January 28th. Since the property tax rates have not yet been established, nor tax bills sent to the homeowner, there is no tax lien on the property at this time. True or false? Yeah, remember that all property, regardless of what they owe, gets a lien placed on January 1. Beginning of the new year, every house has a lien on it for property taxes. All right, every piece of property has a lien on it. All right. So they are attached on January 1st. Everybody good with that? True or false? A general lien may be filed against both real and personal property. Yeah, sure. But if it is specific lien, now the general lien is your federal income taxes, your state income taxes, any judgments that are against you, any car payments, things of that nature. Those are specific to the person. I'm sorry, general to the person. A specific lien is to the property specifically. Mortgages, taxes, mechanics liens, right? Those are specific to the property. Okay. The real property tax value for a property stated as 0.015 converts to what mill tax rate? How many mills is that? Yeah, we're going to move that decimal place back, right? 3 spots. That's going to be 15 mills. All right. A roofer finished installing a new roof on July 5th. As of November 18th, he has not yet been paid for the work. Can he file a mechanics lien on the property? Remember our dates now. Finished the roof on July 5th. November 18th, he has not yet paid for the work. Can he file that lien? Yeah, you got 120 days to file it, right? So July 5th, he did the work, August, September, October, November 5th would have been the last day he could have filed that, assuming 30 days in a month, right? And then he's got 180 days to take it to court. You're right, okay? So in this particular case, no, 120 days has passed. Needs to do that. Jolene grant Jimmy a written easement to cross her property that is later recorded. Jolene sells her property to Frank. Can Frank stop Jimmy's use of the property? No can do, right? They're recorded easements. They are recorded easements. So on both lots, both the dominant and the servient tenements have recorded the dominant so that he can use it, the servient so that it can be used. All right. Okay. All right. So let's talk about this math packet here. Let's talk about it. This I gave everybody the link to earlier tonight. Hopefully you can bring it up. Hopefully you know where it is in your Dropbox. You really need to know where this is and use it. Do all the problems that are in here. This is only going to help you. Now, we don't just give you the problems, okay? We're going to tell you how to go about solving them and give you the issues right here, okay? So when we look at this math packet, all right, it's going to tell you that in the national section, this is what we're going to learn in our national. Compensation, commissions, fees, valuation, loan to value ratios, measurements, net to seller, cost to buyer, points, right? Property management, investment, so a rate of return, taxes, and other prorations. So we're going to learn those. A lot of them are the same. Don't get crazy. They're okay. In the state portion, we're going to qualify a buyer using expense ratios, income and expense, 28 and 36. We'll talk about that later on, chapter 15. Measures of structures, right? How much space do we have? Square footage, right? Livable area, land measurement, including front feet. That'll be in the next chapter. Net to seller, which is a lot the same here, right? Credits and debits. Net to seller is going to be important, right? If I tell you that the first thing you're going to hear from the seller, what's the first thing the seller is going to ask you when you walk into the house? How much can I sell my house for, right? You better have a pretty good idea. You guys say, hey, I got some questions before we can figure that out, right? How much mortgage do you have? How much do you need for a down payment? Let's figure out your prepaid tax or your taxes you got to pay. Let's figure out all of those things. And then we can come up with a number. How much is my real estate commission going to be? All of those things got to come up before we do that. And we'll show you how to do those. So again, all of these are important. Mini closing problems. We're going to do a mini closing problem that's probably going to be a page long and take like 40 minutes to solve. But all it's going to be is all the little bits of math that we're teaching you as we go along. It's not that hard. Matter of fact, they're kind of fun to do. Right? Kind of fun to do. I enjoy it. I enjoy it. Okay. Monthly interest we should be able to do, loan affordability, all these things. So you can read all of this stuff if you wish. We're going to concern ourselves right here with the tax calculations. Tax calculations, all right? So we're going to give you the formula. Assessed value divided by 100 times the rate. That's going to tell us the tax. So if it asks for a millage rate, divide the assessed value by 1,000. If the property is located in the city and the county taxes are paid. If the property is located in the county, only the county taxes are paid. Okay. All right. Now we've done some problems before, but I want you to take a shot at problem number 1. What is the annual tax bill for a property assessed at $130,000 and a tax rate of 75 cents per 100 of assessed value? Go ahead, take a moment to do that. In this particular case, we're going to take our value, remember our T, we're going to take our value And we're going to multiply it, right, by 0.0075. Remember, we moved those decimal points 2 places to the left, right? And that's going to equal $975. Okay. Or we could have just as well done it this way: 130,000 divided by 1,000, all right, is going to equal 1,300, and then multiply it by 0.75. And guess what that's going to do? That's probably going to give us the same answer. Either way, depends on what you want to multiply, what you want to divide 1,000 by. Oh, I'm sorry, 100. I said, I apologize. I should have said 100. Okay. All right. It depends on what you want to divide by 100. Either one is right. Either one is the same way. It's just to show you that you can do it either way. Okay. So don't be afraid of that. All right. Okay, number 2. What is the annual tax bill for a property in the city assessed at $245,000? Tax rate is 45 cents per hundred in the city, 35 for the county. What is it? All right, let's take a look at this. Okay, so the first thing we got to look at is how much we are in the city. So we have 0.45 plus 0.35. We have to add those together, and that's going to give us 0.80 hundredths, or 0.0080. Everybody agree with that? 0.0080. All right, 245,000 is our assessment rate, right? Times 0.0080, and that's going to give us our 1960. Okay. Or same thing, 245,000 divided by our 100 is going to that's going to give us our 2450, and we're going to multiply that by 0.85. And that's going to give us the same, exact same answer, 1960, sorry, 1960. Okay, works out the same way, whatever you're comfortable with. All right, I just think it's easier just to move the decimal 2 places forward. But whatever you're comfortable with is really what I'm concerned with. Number 3, property is assessed at 64,410. County tax rate is 8.9 mils per dollar. What would be the amount of the annual tax bill? What would be the monthly payment to the escrow account? You guys are way ahead of me. All right, 64,410 times 0.0089, all right, is going to give us 0.0089 is going to give us 573 and 25 cents. That's going to be our annual. 573 and 25 cents divided by 12 is going to give us 47 and 77 cents. Right? 47.77, give or take a penny. Okay, so let's do it. All right, so for Carrie's sake and for all of you others who forgot to ask or didn't want to ask, I know some of you are getting it, and that's good. All right, if I'm assessed at 64,410, it doesn't say whether I live in the county or the city, so I'm gonna have to assume that I'm living in the county. The county rate is 8.9 mils per dollar. So that is what? 1,000th, right? So if I'm using mils, that's 1,000. So I got to move that decimal place 3 places over, which makes this 8.9 into 0.0089. I had to divide this number by 1,000, or I could have divided this one by 1,000, and I would have done just as right. Okay. So at that point, or I could have done this, right? It would not have penalized me to do 64,410 divided by 1,000, right? And if I did that, it would be 64.41 times my tax rate, right? My tax rate, which would have been 8.9, all right? And that's going to give me the exact same number either way, 573.25. Or if we do it monthly, we're going to just take that number divided by 12, 5 by 12, right? So that's all we're going to do with this. This is millage rate. If we ask for mils, then it's per 1,000. Otherwise, it's going to tell you per 100. That's just the way they do it. That's the North Carolina is per 100. South Carolina is going to be per 1,000. Millage. Other states are millage rates also. Okay, so you do it. All right, for all you folks who got ahead of me, do number 4. Do number 4. All right, so the first thing we got to look at here is we have to change our market value because we're assessed at only 60% of our market value. So 50,000 times 60% or 0.60, right, is going to be $30,000. That's going to be our taxable rate. So we also have, we live in the city, so we have $1.45 and $2. And that's going to be our tax, which is $3.45 per 100, right? Or 0.0345. Okay. So 30,000 times 0.0345 is going to equal 1035. 1035. I'm going back and I'm going to make sure you understand it. All right. First thing we had to do here was find the rates, and we lived in the city, so we have to add the county rate and the city rate together. And that's going to come to, come on, so we got 145 plus 2. So our tax rate is going to be $3.45 per 100 because we have to pay, we live in the city, of assessed value, per 100 of assessed value. All right, now we are going to be assessed at 60% of the market value. Well, our market value is 50,000. So we have 50,000 times 60%, or 0.60, either way. So that means that our value that they're going to tax us on is going to be $30,000. So we had to make some adjustments here. So we adjusted our market value down to 60%, because that's what they said. And I added the 2 tax rates together. So we have now $30,000, right? We can either divide this by 100 or take that 345 and just move that decimal place 2 places over and make it 0.0345, and we multiply it. Okay? And in that case, we are going to come up with 1035. That's going to be our taxes for that year.
If you like this video, feel free to share it with a friend. For more real estate education content, please subscribe to the channel. From all of us at Seacoast Real Estate Academy, thank you for watching.